You've now got your pulled pork. Who are you going to pull for us today, Tony?
Well, interesting one, and I picked it because it's Grange Resources. GRR is the code. I picked it because it's the top of the buy list. I did it many years ago, but not recently, so I thought I'd do it again. And in my research, I found a couple of interesting things. The other thing to point out is that when I did the analysis, it was on Alex's download from the weekend when the price was 23.5 cents. The share price I checked before we came on is now at its sell price of 22 cents. So people need to be aware that this is either now a sell, or if it bumps back up the next day or so, it's pretty close to the sell line.
But then you said you think iron ore, it's an iron ore stock, is nearly a buy. So I would have thought it would be going in the other direction.
I did too. But as we go through
come out with results.
The results are great. But as we go through the pulled pork, we'll see that the problem is they've announced that they might be shutting the mine in a year or two. So that's weighing on the stock. So it's changed from being it still is a great cash flow generator, and you can buy it for less than 1 times cash flow at the moment, but there's a good chance that the cash flow only lasts for another 2 years. So that's why the market's walked away from it.
Although the share price, so I just noticed that when the quarterly report came out at the end of January, the share price went up 15%.
Numbers were good.
Yeah.
Okay. Yeah. Okay, so for people who don't know, Grange is based in Tasmania, which is kind of an unusual place for an iron ore company, but apparently magnetite's been found in Tasmania in the northeast for over 100 years. And Grange, in one form or another, has been going for over 55 years. It's based in or near Burnie in the northeast of Tasmania. The difference with Grange is they produce very high concentrate iron ore, and they produce it in pellet form. And the reason they do that, even though it requires a little bit more processing than just simply digging it out of the ground and sending it off to China, is because iron ore pellets are higher in concentrated iron ore, ferrous oxide, than just lumps that come out of the ground. And therefore, it's better for the blast furnaces that use it to make steel. So they produce less slag and takes less energy to burn the pellets, and it's better emissions. So they're considered to be a better product. On the flip side, it's being shipped from Tasmania rather than from northwest WA. And so the transportation costs are higher, but given a better concentration available, it's competitive in the market. They operate mainly in a place called Savage River, and it's the name of the iron ore mine. It's 100 kilometres southwest of the city of Burnie, and it also operates a plant to produce the pellets in a facility called Port Latter, which is 70 kilometres northwest of Burnie on the coast. So 2 operations for this company, both near Burnie. They have picked up a tenement in WA, and I thought it interesting that they picked up a tenement 90 kilometres away from Albany, which is in the south of WA, whereas the Pilbara, where most of the iron ore mines are, is in the north. So I don't know if this company likes being in the bottom end of the continent or not, but that's where they've been exploring. The project in Albany is called the South Down Magnetite Project, and if it comes to fruition, it's quite large, with ore reserves of 388 million tonnes. So worth progressing. They've been working on it now for a long time, and they've announced that they're at the stage of looking for equity partners and getting final approvals to bring it to market. Bear that in mind. The other thing to note about this company is that it's nearly half owned by a Chinese steelmaker called Shagang International. They currently own just under 49%. And they're a large steelmaking company coming out of China. They're in the Fortune Global 500. And way back in 2009, they took a 69% stake in Grange. and they've slowly sold down to just under half in that intervening period. All looks okay at the moment, but towards the end of last year, the company had to come out and announce that their plans for expanding the Savage River mine, which is due to finish in 2027 onwards. So they said 2027 to 2029 are being put on hold. So basically what they were doing was they were investigating and doing a feasibility report for building an underground mine under the open cut mine at Savage River. And they announced the results of that feasibility study back in about January of last year. And the share price has been in decline ever since then. I couldn't find out exactly why, but in reading the report, I think what may have happened is that the report says that there'll be a lull in the mining of iron ore and processing of pellets in 2027 for a year or two, because they have to shut the open cut mine first to build the underground mine underneath it. So I suspect, that put a spook in the market that there was going to be a couple of years when cash flow would be down. But I can't definitively say that's the case or not. However, at that stage, they were saying, big tick, project's going to go ahead. In the last month or two, the board's come out in January, following an article on the Fin in December, saying that actually at the current iron ore price, they're not going to go ahead with the open cut mine. So basically, it's pull up stumps in about 3 or 4 years, anywhere between 2 and 4 years, which has then spooked the market even more. I'll read from the Fin review from December 17th, 2024. One of Tasmania's biggest employers has warned that its $1.3 billion plan to expand the Savage River mine south is unviable at forecast iron ore prices. Grange Resources, which contributes nearly half of the state's mining tax revenue, has planned to transform its rapidly depleting open pit operation to an underground mine on Tasmania's western coast. The mine's output will begin falling in 2027, and it is expected not to produce anything by about 2029. If the site, which produces high-grade iron ore concentrate shipped from a jetty near Burnie, does not progress with the proposed underground expansion. Grange Resources feasibility study for the underground project reveals it will cost about $94 per tonne to dig up iron ore over the life of the mine, and about $80 per tonne once the full extension is complete by 2030. But these costs exclude shipping from a remote jetty in Tasmania, government taxes, and government royalties. Grange Resources does not estimate shipping costs in the study published by the market. However, freight costs are higher from Tasmania than from the Pilbara. Higher grade iron ore trades currently at 120 per tonne on the Singapore Futures Exchange, but brokers are tipping the iron ore price will decline next year and through to the end of the decade. Goldman Sachs expects a 10% fall next year. And while Grange Resources commands a premium thanks to its high-grade output, boasting 65% iron content, 3 percentage points above the benchmark, the cost of production at the expanded mine means that the company would barely be breaking even at today's prices. Grange Resources said it would update the market if anything changes. Our focus will be on the continued delivery of iron ore from the open pit as we reassess the timing of the commencement of underground production, it said. Grange is one of the state's largest employers with 680 staff and one of Tasmania's top taxpayers, paying $23 million in mineral royalties. Work on Southdown, that's the one in Albany in WA, progresses and may plug the gap if Tasmania shuts. However, some approvals look like they are still required, and the mine may start in an abridged form. So this stock is becoming more of a story type stock. Even though it's throwing off lots of cash, the cash is likely to come to a standstill in the foreseeable future unless something happens. Now, what could happen, iron ore price turns up, in which case it becomes feasible and they start to build the underground mine. They get the right approvals and the right partners on Southdown in WA and move the mine to there. But that's a fair bit of work. Or being the largest employer in Tasmania, the government says we might create a package of incentives to have you stay in the state. So I suspect my take on this company is that it's bouncing around at the bottom of its stock price at the moment. It's just become a sell for us, but there is scope to re-rate if they can solve the ongoing mining of iron ore problem. And you have to think that there's a lot of people with vested interest in them doing that, including management, but also perhaps the Tasmanian government. So a solution may be found. But whatever happens, it's going to be driven by announcements now, the price, rather than by fundamentals in the company. So to go through the numbers, stock price for the analysis is 23.5 cents, which, as I said, is above where it is now. No stockbrokers publish analysis on this company. Therefore, there is no consensus forecast, nor forecast earnings per share, which means no RB2. Yield is currently over 10%, but that's a question mark on that. Is it sustainable? Even if they keep paying that rate for the next couple of years, I suspect they might decide to stockpile some cash in case they need it while they work out what to do. So I wouldn't be surprised to see a dividend cut on this company in the next results. But currently it scores highly for us. It's above bank debt and it's above the PE for the company. Stock Doctor financial health is strong and the trend is steady. But again, for how long? Stockopedia quality ranking is 93, based on an F score for health of 6 out of 9, which is good. Stockopedia value rank is 99 out of 100, which is great. However, it's almost rock bottom for momentum because the sentiment's gone down. So the Stockopedia ranking for momentum is 10 out of 100. And the overall Stockopedia ranking is therefore dragged down to 75. So they rank it kind of how I do. It's all the metrics are good, but sentiment's bad. It's below our buy. It's actually a sell. PE is 2.5 times, which strangely enough is not the highest or the lowest in the last 3 years, given it's that low. So we can't score it on that. Prop CAF is less than 1 at 0.96 times. So it throws off lots of cash and we can buy it at 1 times cash, but the question is for how long. IV1 is 47 cents and the current price is 22. So it's way below what you would calculate the price to be based on its numbers. There's no IV2 because there's no forecast earnings per share. Net equity per share for the company is 89 cents, which means we can buy it at a quarter of book value. Again, reflecting the fact that people are wondering how long the assets are going to be around for. I've scored it a 0 for owner-founder, even though Shigang owns nearly half the stock and gets to appoint some of the directors or the controlling number of directors on the board. They're not really the owner-founders, so I'm not going to score it for that. Don't really need to because the quality score is so high. There has been consistently increasing equity and the PE is less than yield, so they both get scores, which means the sum up the quality is 12 out of 13 or 92% for quality and 0.96 for total QAV score, which is very high and puts it at the top of the buy list. So, yeah, all I can say is that go on sentiment with this one. On the numbers, it's fantastic, but it's really a story stock now. As soon as they announce one way or the other what they're doing, whether it's shutting up Southdown in a couple of years' time, or Savage River, or whether it's getting Southdown and WA running, or whether it's getting the open cut running, whether it's getting government support, which makes all that happen, or whether it's not, the share price is going to be driven by the story going forward.
So just to be clear, it's at the top of the buy list, but it's actually a sell.
Yeah.
And in the buy list, we can't buy it because we say iron ore is a sell, but iron ore is actually a buy. So just to be clear on those things, don't trust anything on the buy list when it comes to GRR.
Well, as we always say, before you buy something, do the more up-to-date research.
Yeah, and it's changed. Both of those things have been updated in the last 24 hours since we put it out. All right. Thank you, TK. It's GRR.